Hello, and welcome back to another episode of Wealth in Christ podcast, a show where we encourage you to find spiritual and financial balance in your life through the abundance grace of God. On the podcast today, we have Mr. Andre Albritton. Mr. Andre is a well-known for educating people and trading in the stock market and REITs. And today we're going to talk about Mr. Andre's journey so far in the stock market. So thank you for being here, Mr. Andre. How are you doing?
I'm doing well, man. Thanks for having me on the show. We appreciate you, brother. How you doing over there?
I'm doing well. Thank you for asking. Um, so how long have you been in the stock market, trading the stock market? How long have you been doing that for?
You know, I think that's a very good question, by the way. So technically, I've been in the stock market, man, since I got a job and I started investing my 401k. So that's like
Wow.
tip number one, employee matching programs. That's you investing. It's a little bit more passive. So that was back in like 2013, 2014. And then around 2018, I started doing this more actively on my own. So like my big story is like I was researching a company. The company's name is called Signet Jewelers. They own the majority of diamonds in the world. So, if you ever hear that diamonds are scarce, it's only scarce because one company owns the majority of them. So I said, okay, that is going to be a safe investment. So, okay, well, people keep buying diamonds. I'm like this one. I think I bought it for like $76. I'm about one stock at the time. And I know it dropped, it tanked, and I ended up selling like 2 years later for maybe $30. I lost $40. But, it was a good learning experience. And, keep in mind, I only had one share, so it wasn't that bad. It looks like my life savings. But I learned a lot of lessons from just that one trade. So that's been really helpful. And since then, I've just been growing. So I worked in a financial firm, been studying how to trade, and I just really got into it. I dived on in. Now I teach other people how to do trading for the stocks and REITs. So it's been a heck of a journey, man.
That's good. That's good. And do you only trade stocks, or you also do options? All the above.
So I do options and I do cryptocurrency. I'm not to the point where I can teach somebody about it, but I'm dangerous enough with the information I know. So I did some option trading last year during the summer. And the thing about that is it's easy to make money. It's easy to lose money. So I might have broke just even on my options trading. So I just do it a little bit here and there, but not too much. I usually stick with like a little bit long-term investing.
That's great. So what has been the biggest challenge for you as an investor? Maybe investing for almost 7 years. So what has been like the biggest challenge for you?
Man, I think the biggest challenge, and I think it's a challenge that affects everyone, is the confidence factor. So you read all these books, you watch Jim Cramer or whoever you want to watch on about stocks, and then you get to the point where you're about to buy the stock and you have to hit that buy button. And I think a lot of people from that point, they freeze up. So I have the same issue going on. It's like, okay, is this the right stock? Maybe I should study a little bit more. Maybe I should take another course. Like looking back at it, it's like I could have just bought the stock and learned so much more than I would have in the course compared to just getting the experience. Experience is definitely a big part. And I think when people get more involved, if you can just invest a little bit here and there, the experience is going to help you with that confidence. So, that was my biggest thing. That's how I was able to tackle that, was just by keep practicing, keep at it, keep learning, and again, keep practicing.
That's great. That's great. So what are some, like, I like the fact that you went into like education, and a lot of times when you soak up so much information that you almost, I guess, get too scared to invest. How would you say someone can overcome that? 'Cause a lot of times people just want to study and get all the information, but they not do anything with the information.
Yeah. So what I would say for those people, well, first off, invest what you can afford to lose, because at the end of the day, investments, anything can go down south anytime. But take like maybe $25 out, something that's not going to kill you, invest into a stock. And keep in mind, we have these things called fractional shares. So what that means is you don't have to save up $1,000 to buy one stock anymore. You can invest $100 if that's all you have, and you'll own 10% of that stock. So that's usually my suggestion. Invest a little bit in what you can afford to lose, see how it does. Investopedia, they have a stock simulator app. So you can go to the website and you can just Google this, Investopedia stock simulator, and you can practice with some paper money as well. So you can put in these practices and say, okay, this is what I would have picked with my own money, and give it like maybe a month, 2 months, and you can see how your stock does. So that also might help ease some of that anxiety of when you actually have to hit that buy button.
That's good. And how important is education and before you get into the stock?
Man, yeah, as you would imagine, education is extremely important. But, it's trying to figure out the fine line for you, because, I don't want anyone to get stuck on the education aspect, because otherwise you'll never make a move. But usually I'll say, take a course. There's a lot of free investing courses nowadays. Find someone that you can relate to, whether it's me or someone else. There's plenty stock investing gurus out there and all that stuff now. But, it's just a matter of learning enough to the point where you feel comfortable to say, okay, this is my strategy. This is the stocks I'm looking at. And this is the date I'm going to purchase these stocks for a little bit of money to test out the waters. So, just testing out the process, because a lot of people, they kind of fall to the FOMO, fear of missing out. But, there's money to be made every single day. So just because you miss one stock, you'll be okay. I promise.
That's definitely great. I like the fact you spoke about FOMO, because like right now, everything, the whole market is hot, whether it's crypto, whether it's stocks, and like almost like anybody can literally trade. So what would you say to people of that type, because everybody just want to make money and they don't really care about, learning information, understand why the stock is going up, why the stock is going down. What would you tell them so they don't lose too much if they are?
Yeah, the first one I'm going to tell them is, invest what you can afford to lose. Because I mentioned, I invest in cryptocurrency. So I break down my money. So like if I have $100 to invest, 10% of that money is only going to risky stocks such as cryptocurrency, because honestly, I don't understand it, but doesn't mean it doesn't make money. So, it's been making me money, but if it went down tomorrow, I probably still want to know why it went down, but I'm not going to be crying in my bed or anything, right? It's only 10% of my money. I understand the risk. So that's usually what I would tell them as well. It's like, hey, if you don't really understand it, like you can't tell me why the stock is going up. You can't tell me why the stock is going down. It kind of equates to gambling at that point. So at that moment, it's like, hey, Las Vegas rules, make sure you're just not investing your mortgage money. And if you lose the money tomorrow, you're going to be okay. Like, because the anxiety is really high, especially for like cryptocurrency. You can see something drop in 20%. You can see something drop 50%. You can see it go up 50%. But you don't really know when to sell. You don't know when to get out of there, when to do anything, because you don't understand what you're doing in the first place. So it can really complicate anybody's.
That is great. So that leads me to my next question. How do you go about, researching before you get into the stock? What do you look for in a stock before you purchase it?
No, that's a real good question, man. So I break down my portfolio into like 4 different areas. 30% of that is going to large cap companies. So that'll be Facebook, Amazon, Walmart, index funds. So these are companies that have been around for a long time. And then I have middle cap stocks. Those are still pretty well-known companies like Royal Caribbean, Carnival Cruise. Though it's not as big. And then I do 3% of my money into real estate investment trusts. Those are companies that just own a lot of real estate and they have tenants across the nation. And as I mentioned, 10% risky. So the first thing I need to do, and this is what everyone should do, is decide what is your goal. So whether my goal is to say, hey, I want to invest in something safer, I'm going to look towards index funds. And for that one, it can kind of go, let's go down the line. So for index funds, those are the main one. The index fund is just a basket full of stocks. So it's going to own different percentages of each stock. So it might own 2% of stock A, 2% of stock B, so on and so on. So usually those are a little bit safer, because if stock A goes down, that's only 2% of your portfolio for that one. So usually index funds can be safer. And when I'm researching these things, I'm gonna say, okay, is this one meeting my goal? I'm going to Yahoo Finance to read all the recent articles. I like to use Morningstar. They're good to show you the finances in the back. And really, for the most part, I want to make sure that the revenue is still growing, make sure that expenses are at least staying the same or staying low. And I want to really look for any major red flags. So the red flags are going to be like bankruptcy, possible mergers, anything that I think could harm the company's value. That's something I will usually stay away from. And then, if it's meeting my goals, I've done all my research, then I'll probably go ahead and invest into it. And if it's doing well, I check in on a quarterly basis every 3 months. I'll keep reinvesting back into it. Because, it's kind of like if you find a golden goose, you want to invest more money into it, right?
Yeah.
Yeah. So, it's the same. So if it's doing bad, I'll sell it if I need to, and then I'll go look for new investment, or I'll go back to my watch list of other companies I wanted to invest in. But maybe I just didn't have enough money at the time.
That's great. That's great. And would you say a better strategy is to dollar cost average is a better way to build positions in different stocks rather than just throwing $100 or $1,000 right away?
Yeah. No, dollar cost averaging, that's a really good stock. For those who don't know, that's pretty much, you just do this on a consistent basis. So every paycheck, let's just say $200, you invest $200 every paycheck. So you're going to invest that $200 at the highs of the market, the lows of the market, in the middle. And the idea is it should all average out. So for that one, I'm not going to say it's better, just because when it comes to investing, everyone has their own strategy. So that strategy might work for some, for others it might not. Maybe you want to get like a big payout on bonus time. That can be your only time you can actually invest. Maybe dollar cost average style is the best thing for you. When it comes to investing, there's like so many different strategies, but they all can make money at the end of the day. So, you got Warren Buffett. He might not do the dollar cost average, though he preaches it, but he's still making money too. But no, I do like that strategy. I think it's great, especially for beginners, just to go and get you acclimated to things in the stock world. And it puts the biggest principle at work, and that is consistency. So if you are consistent with your investments, like you just consistently invest into the same index fund that follows the market, 10 or so years, you'll be happy you did. But yeah, it's taking consistency, putting in time, that resource that we can never get back, and it's making that money compound for you over the long term.
That's great. So how would you advise for someone to get started in the stock market? They want to get started as soon as possible. How would you go about advising them to get in?
All right. Can I do my own plug for a course of mine?
No problem.
Okay, cool. I'll make sure I don't break no rules. So usually when people have questions about how to get invested in the stock market, I used to have to give this big explanation. So then I got tired of giving these big explanations because everyone had the same question. So I made a course for it. So it's the Investing Crash Course for Stocks. I think the minimum you can pay is $5, and then all the profits go to a nonprofit. So if you want to, I'll say start there, because that's probably the best course you're going to find for $5 to get you started. Now, for whatever reason, if you don't want to do that, I'm going to say YouTube it. Like YouTube and Google is our friends. For me, that's really how I learned about all this stock investing. Now, granted, when you're learning this information, you can do some of the good websites such as NerdWallet, Big Wallet, Investopedia, Yahoo Finance. And from there, you can teach yourself. Like if I can do it, I'm sure you guys can do it. I had I'm pretty sure I had a C average in high school, but even then I was still able to make some of this stuff work. So, I'm just saying I'm not the shiniest crown in the box or anything, but if you put the time in, you put the effort in, you keep at it, yeah, you can make those free resources work just as fine for you.
That's great. And you mentioned that you read some books. What some books have you read in terms of investing that's helped your journey?
The main one, I was the Intelligent Investor. And that was honestly it, man. And I say that just because for me, I'm not much of a reader. So me reading books, it just wasn't happening. Hence why I had that C average in high school, not much of a reader. But, for me, The Intelligent Investor, that's the main one I read. The other ones I read was the Dave Ramsey. I think that's just good for financial sound and investing too. And the Millionaire Next Door, that's kind of how I got my name. That's good for investing too, in the sense, it just teaches you about consistency and dollar cost averaging. Outside of that, I've been listening to a lot of podcasts. I do my own podcast now. And most of the times, I'm just reading articles, if we can count that as books. But yeah, if you go to Yahoo Finance, go to that, go to balance.com, just use Google. Honestly, like type in, how do stocks work? There's gonna be so many resources that come up. I mean, the amount of information we have here is tremendous. So really, you can get started at any time. I think this is a matter of, do you actually want to get started, and are you going to stick through with it?
Yeah, that's definitely true. That's definitely true. So I definitely want to ask this question. I'm sure some people want to know, where do you see the future of the stock market going in terms of this year, next 5 years? Some people think it's going to crash. Some people think it'll continue to go up. So what is your position on this?
No, man, I got to do like 2 quick disclaimers. First off, I'm just investing nerd. So always talk with your investment advisor, of course, be on the safe side. The second one is, when it comes to these type of questions, it's truly just an opinion. So you can have 2 people on Wall Street. They both make 6 figures. They look at the same stock. One guy can say, hey, I'm not touching that thing. The other guy can say, hey, I'm investing all my money into that. So at the end of the day, this truly is all opinions. And that's why it's so important to understand what's going on, just so you can come to your own opinion. Now, for my opinion about the future of the stock market, we have such a pent-up demand for travel and entertainment. So travel stocks such as, like the cruise lines, AMC theaters, I'm pretty sure those things are going to skyrocket this year because they're going to have a lot of high income. Then things will hopefully settle down, probably a little bit settled down in 2022 because the travel is going to be so high that most people are going to have to put their travel plans off until next year. And then we'll kind of see what other companies will be doing well for the next sector. The other way to look into these stocks is, you want to be proactive compared to reactive. So by that, I mean, when Joe Biden won presidency, did you read his plan? Did you hear that he says he wants to spend billions of dollars on infrastructure? So that means if that infrastructure goes through, some of these companies that focus on that are going to get some of that money. And, government money is good money because that is guaranteed money. So, that's another thing. Look at the other trend. So the self-driving vehicles, that's really big. Tesla can ideally take advantage of that. But also when you read a little bit more about it, you'll learn that 5G is a major thing for these self-driving vehicles. So invest in the 5G companies, like AT&T, there's cell tower companies that are the ones that build the cell towers. They have been doing well for the past 2 years because of that trend coming up. So, I think that's pretty important to say now. When it comes to coming to your own conclusion, I mean, look at the trends. Try and be proactive. Don't be reactive, because if you're reactive, you're going to be buying these stocks at a higher price. So yeah, that's like my big synopsis of the next 2 or 3 or so years.
That's great. That's great. I also want to talk about how important is diversification in your stock portfolio. A lot of times people get so caught up in stock and tech or EV stocks, and and when these sectors go down, you have a very nasty portfolio.
Pretty much, yeah, man. So diversification is extremely important. And I can't stress this enough. When you see people on Instagram saying, hey, I made this much money, invest in this stock, that is not a sign to say, hey, I'm going to invest all my money and do the same thing. Because, I mean, we don't know the full story. Like they invest $10,000, that could be like 10% of the portfolio. It could be chump change to them. So for my diversification, I'm a little bit old fashioned because, when it comes to this, when it comes to my retirement money, I want to make sure it's still there. I also want to make sure it's still growing at a decent rate. I don't want to be greedy about it. So, if it gets 10%, I'm happy with 10%. If it gets 5%, I'm still happy with that. But, a lot of people, especially when they see Instagram influencers say, hey, this stock may be 80%, they might sell some of those stocks if it doesn't make them 20%. So, go back to your goals. see if this diversification is ideal for you. That's kind of going to guide you. At the end of the day, it's extremely important to be diversified. If you can't take a company going down and that's 100% of your money, like your mental well-being cannot take that, yeah, you got to chop it up a little bit, and that's okay. So, maybe you want to spend 25% on Tesla money. That's fine. Maybe you only spend 20% on the EV stocks or cryptocurrency, but you have everything else in index funds to make sure you have some strong financial foundation for yourself in the future. Because I have lost money before. I've seen other people lose money. It's not a fun event. So, just diversify a little bit.
That's great. That's definitely great. And I want to ask this: why are you so big on REITs? Seeing something in your bio, it's like you preach about it a lot. Why are you like very big on REITs?
Man, that's the question of the year. For myself, when it came to REITs, I found them so interesting. There's a lot of different sectors. So you got REITs that focus on hotels. Some focus on timberlands, like they own acres of land that just have trees on it. So REITs are just interesting to me. And I like to focus in on it because they pay higher dividends. And we can consider them pretty safe in the stock value just because real estate is pretty safe. So real estate tends to go above inflation. So because of that, I can say, okay, these REITs, this can be the foundation for my investment portfolio. So it's going to go up increasingly. The dividends will keep paying out over the long term. And at the end of the day, if I'm being honest, I'm a lazy investor. So, I want to make sure I get my dividends easily. And I want to invest in real estate, but I don't want to have to actually manage the real estate property. So this was like the perfect middle ground for me when it came to REITs.
That definitely does make sense. Definitely another way to get exposure to the real estate market without actually being in it. That's definitely great. My other question. So since crypto is very big, what's your perspective? Where do you you say you're not that big on it, but where do you see it in terms of crypto and the stock market? Like, how do you see those two different markets playing out?
Man, that one was truly opinion based, no doubt. When it comes to these things, I wish I could even explain what cryptocurrency is. So for me, I was going to say my opinion. Once again, I invest in a little bit in crypto. I promise, guys, I'm not a hater. This is just my opinion. But like crypto, I just can't see it sustaining past 2 decades. And I say that just because I know a lot of Bitcoin, Ethereum, Dogecoin investors. I don't know anyone who actually uses the currency to buy stuff. So it seems like it's just everyone collecting these things until, so the value keeps going up, hype keeps it moving, social media keeps it moving, but doesn't seem like nothing in concrete in a sense. It's like, if you remember the pipeline that, got hacked by the, the Dead Side people or something, by the hackers. That's the most time I've ever seen cryptocurrency used because they got to use 5 million in non-traceable cryptocurrency to pay them off. Majority of the times, I just haven't seen many people use cryptocurrency yet. So, that's been my major kind of setback for the currency is like, if no one's using it, is it truly valuable? Right now, we're saying it is, but I don't see any practical uses from it yet.
That's definitely interesting perspective. That's definitely interesting perspective. Definitely interested.
I promise I'm not a hater, y'all. That's just my simple thinking, but I know there's like a bunch of other experts who understand it way more. Go listen to them on cryptocurrency, because otherwise you'll get my simple mind perspective.
No problem. There's no problem at all. So basically, so that's great. My other question I have is, how would you basically, for someone that is losing money right now, how would you basically help them stay encouraged? Because like you said, all these pressure, you don't want to keep falling to FOMO and bad habits. How would you advise them? They've been losing trade after trade, or stock pick after stock pick. So how would you advise them to stay on this path?
Man, that's a real question. So I keep it real with everybody. If someone's been trading for, let's say, 3 years and they haven't made a successful trade, I would say, hey, you just need to do index funds. Like, keep it at that. Maybe this just ain't your thing. Real estate is not my thing, so I stay in my lane. Pay a financial advisor. Pay them that 1% so they can manage your money a little bit better than you can, and call it a day. Now, for someone who's like kind of in the middle ground, like getting some winning trades or getting some bad trades, I'm gonna ask them just to say, hey, why are the good trades making money? Like, walk me through the process. Let's see if we can continue to replicate this. Yeah. And then, of course, if they're like our age, we're two young gentlemen, it's like, hey, we got time to take losses. We got time to build our experiences. We got time to still grow. And, that's definitely the beauty of when you invest when you're young. So like a market crash happens last year. If I was 65 about to retire, I'm going to be highly upset because I can't retire no more. But, our age is, okay, this was a buying opportunity for us. This was our come up year. Last year was our come up year pretty much. So, we got time in the market. So, mistakes happen, bad trades happen. But I truly believe if anyone just keeps at it, keep learning, you're going to get the hang of it.
That's great. And this big question, I think we kind of spoke about it already. Why long-term investing over short-term investing?
Say that for me one more time.
Why should people choose long-term investing over short-term? A lot of times, people want to get the fast gain, the fast money, but over time, it's proven that the longer you stay in the stock or in the trade, the more successful you can be.
Yeah. So it goes back to your goals. So if you're investing for retirement, do the long term. Now, myself is a perfect example. I have two accounts with Charles Schwab. I got my old man Dre, that's for my retirement money. And then my second one is my COVID cash money. That's for the more short term. So you notice that each account has its purpose. So I also suggest to do the same for you guys. Just because you get $1,000 doesn't mean you have to invest into only one stock. You can split up into accounts if you want to do a little bit short-term investing and a little bit long-term investing. Now, as you mentioned, usually long-term, the longer you stay in it, the better chances are that the stock is going to increase in value. So that's one thing. But if that's not your thing, like let's say, like for me, I use my money, the COVID cash money, to help with my down payment for my house that's going to be coming up this year in September. Fingers crossed. I use that for short-term for a reason. So because of that, I'm going to act in a short-term manner. So these are the companies that said, okay, I think these are going to turn over in a year. So it wasn't a lot of Facebook or anything. It was a little bit of Amazon, a little bit of Tesla, some electric vehicle companies, just taking on that risk because I understand what my goal is. So I don't think there's like a right or wrong answer. I think once you know your goals, the answer is going to be obvious, like simple as that.
That's great. So that leads me to the next question because you were speaking a lot about goals. What is your goal, and based on your goal, that's just how you invest. But sometimes your goal could be more bigger than you can actually do, than the risk that you are able to take. So how would you advise somebody like that? Because somebody can say, I want to make $1 million this year, but the risk that they have to take to get to that $1 million, is it worth it? Is it not? I don't know.
To me, it wouldn't be worth it. Yeah, someone says they want to make $1 million and they are dead set on $1 million this year. I'm gonna send them to Las Vegas. Like, I have nothing else for them. But yeah, like realistically, everyone's gonna be different. So I say this a lot. Personal finances is personal for a reason. So, for me, 20% is a lot of money. Like, that's amazing to me. And 10% might be a lot of money to someone else. 50% might be a lot of money to someone else too. So I'm going to be real with them. I'll say, hey, if you're looking to make 50% of your money in 1 year, we'll have to do some risky things. Like, well, pretty much throwing it in crypto. Now I'm going to let them know, like, hey, if you're not okay with losing this money within 2 months, these aren't the trades you should be making. or at least this isn't the money you should be investing. Maybe cut it down in half. Then if you do well in the first 2 months, use that money to go again or something like that. But, it's just about having realistic conversations like, this is what you want. This is what you're going to have to do. If you're not feeling okay with it, we need to reevaluate. So yeah, realistic goals, because it's just numbers. Like, numbers don't care. So at the end of the day, you got to do what you got to do. Whether you need to go to Las Vegas or invest in crypto, or you just want to invest in some index funds for the long term, depending on your goals, you'll know the right answer.
That's great. That's great. I definitely want to say thank you for your time. Could you close out with a word of advice, and where people can find you, and also the course that you mentioned, if you can do that, like.
Yeah. So for myself, you guys can find me on Instagram, of course, in true millennial fashion. I'm under the Millennials Next Door. And actually, if you follow me, there's a tab, link in my bio. It has all my free resources there. So you can get the course. If you want to learn more about REITs, I have something for that too. I got something for everybody, honestly. So yeah, just follow me on Instagram. My last word of advice is, if you're watching this, I would say take action after this. A lot of people, they attend conferences, they listen to podcasts, but they forget the most important thing is to take action. I don't care if you buy 1 stock or 5 stocks. I just want you guys just to get started. Remember that Investopedia stock simulator. That's something you can use. Like tomorrow, it's free of charge. Use it, practice, get into it, and just be proactive instead of reactive when it comes to investing. That's going to be my last piece.
Thank you again, Mr. Andre. It was definitely fun talking about the stocks and how you invest, and hopefully those who are listening to a couple of gems and do take action, and they are proactive instead of reactive. So I thank you very much. Thank you very much.
Thank you.